Today I'd like to talk about another carry trade, the renminbi carry trade, that was instituted last year and it just has unwound itself. So there's an article yesterday in the Financial Times saying that foreigners are dumping Chinese government bond as a popular trade unwinds. So for the past 2 months, which we've been really following all these currencies, there's been a dumping of the Chinese bonds. So let's go over what the trade was. So investors, asset managers around the world, they bought more than $130 billion starting last November all the way up to August. And it's a trading strategy that involves lending dollars to Chinese institutions. So you lend them the money, they pay you an interest, okay? Then they take the proceeds to buy Chinese bonds. The return from loaning the dollars and investing in bonds could be a return up to 6%, which is a lot more than our 4.5% on our government bonds. So it's a big trade. But then, as you know, the Chinese started their stimulus package. And in their stimulus package, then the renminbi started to trade down and the bonds sold down. This then caused that the cross-currency swap rates were no longer attractive to foreign investors to buy these NCDs. An NCD is a negotiable certificate of deposits. Remember something, the firms are giving to the Chinese dollars, the dollars that they can use in their international dealings, okay? And this swap gets it to them a little bit cheaper. But as you can see here, where we were accumulating the bonds since last November, we're now selling them as fast as we can. In fact, these two charts show this was a record amount of bonds and NCDs that were sold over this shorter period of time. So what does this mean to us? Well, here's the renminbi chart. And remember what they said. Last November, November the prior year, we started to buy the government bonds. And this helped them manage the renminbi and keep it where it is. And you can see we moved up during this period of time all the way until August. And then in August, the trade fell apart because of the stimulus, and so we started selling the bonds and we started selling the NCDs. And by doing that, it also drove down. Remember, if it goes up, it's going down. It goes the renminbi down. So what you're faced with here is, what I want us to realize, I should say, is I myself was looking at saying, what is this stimulus? It seemed to me to be all about the stock market. There did seem to be things to support the debt of the local authorities and everything, but I just couldn't see the consumption that they were pushing. But I said, I'm not an expert in this area, so I just don't know. But really, it had nothing to do with it. What was going on was that the renminbi was being affected by a trade, a carry trade. No difference than the yen was affected by the carry trade. So when we think we know what's going on, sometimes we actually don't know what's going on. And we don't know how many carry trades are out there. We don't know the size. This one's 130 billion. The yen carry trade is estimated to be 4 trillion. Where are they? We just don't know because no one telling us their position. But I just want to say that be aware that what we think is happening may not be happening, because behind the scenes there are trades that are being done of huge size and an import that affect the markets in ways that we don't find out until afterward. Think about it. We're finding about this afterwards. We didn't find out that, hey, this was going to happen. This is what's already happened, and you can see this now. Like and follow, and certainly let me know any of your comments.